Hey everyone, Ben here. The market for electric vehicle stocks is booming right now, from Tesla to NIO to Workhorse. But what will all these companies need? All these EV companies, all these electric vehicle companies, of course they'll all need to charge their vehicles. So when there's a gold rush, why not just sell shovels? In this video, I'm going to dive into my top EV charging stock to buy right now. I've done a full analysis of the EV charging sector. I've looked at the different players, and this one seems like it could be a really good investment. So stay tuned to the end, and I think you'll like what I've got for you. But before we dive in, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. If you do find any value in this video at all, please give it a big thumbs up. That helps out tremendously with the YouTube AI. With that being said, let's dive in. So what is this company? Well, the company is called EVBox, and it's merging with ticker TPG. Why? Now, the funny thing about this is I mentioned this many months ago back in December. So I actually posted this in our private Discord group. As you can see here, I posted best EV charging stock on my watch list, December the 15th, 2020. European charging market leader, 70% revenue growth, EBITDA positive by 2023. Valuation looks better than ChargePoint, still researching though. So since I made that post in the VIP group, the stock is up by 163%. So congratulations to those of you guys which invested. If you guys want those early updates, check out that first link in the description below for the VIP group. But in this video, I'm going to dive into this company, and it still might not be too late to invest. We're going to dive into the valuation and see how it's changed from before to now. Okay, so EVBox Group, let's just dive right into it. Leading provider of charging solutions with proven track record of executing growth. Founded in the Netherlands, so this is basically a European play on the EV charging market. 190,000 charge points delivered to date, the most of any company. So this is a fully operational company. This is not some concept company like Nikola. They also have a software platform delivered as a service which enables customers to share in their monetization of their charging infrastructure. So that's really important. So software companies, software as a service, recurring revenue businesses are the best to invest into. So there's $280 billion of electric vehicle charging infrastructure investment expected between 2020 and 2030 in Europe and US alone. So they have a market-leading cloud-based software platform with high attachment rates and line of sight for substantial recurring revenues, as I mentioned previously. Asset-light model focusing on the sale of hardware, software, and services. So they are mastering the complex European rollout across 44 countries. Proven expertise will benefit continued geographical expansion. So they plan to expand more into the US. At the moment, they're the market leader in Europe. So they're actively expanding into the United States. Recently released new products specifically for the US market, dedicated US sales force and manufacturing facility in Illinois. Right, so this is the platform here. So obviously they install these charging stations. They have the leading European market share. If investing into any business, you want to be investing into the market leaders. So they have EVBox, which is this company and their embedded software. They also have Everon, which is an enterprise software platform, which is also very interesting. I'll have a quick look at that in a minute. So platform solutions. So you've got your EV charging here, very similar to ChargePoint. And then they've got this management software here, and then support and services, which they also provide for customers. So recurring revenue grows over time with the uptake of incremental software products, features, and additional transaction fees associated with increased utilization. So this is their diversified customer base right now. So they have Avis, the rental car company. Who else have we got here? Eon, City of Amsterdam. Of course, it's a Netherlands-based company. Rotterdam. Hotels, you've got Hilton. I believe I saw something with the Marriott on another slide. Amazon partnerships, McDonald's, IKEA, Spa, Unilever, Heathrow Airport, and many, many more. So this company has 650 employees globally, so they're already expanding massively across 13 offices, that is, so that's an international team there. And they are certified in 44 European countries, the US and Canada. So let's dive into the competitors for this company. We've got EVBox, we've got ChargePoint, and a few other players. So this is what they've done. They've got a little tick box here. The software here, they're saying they've got more features with the software compared to ChargePoint. Of course, this is an opinion post, really. This is what I find interesting, though, and this is something which you cannot dispute. And I've actually stated this when I did a full analysis of ChargePoint, the fast charging. So first of all, ChargePoint has fast charging, but this company is a market leader in the slow charging stations, not the really fast charging stations. So that might mean either the customer will have to actually revamp all their products and actually install the faster charging stations, which could be an issue. Ultra fast charging lines up to 350 kilowatts, that's EVBox group, which ChargePoint doesn't have. And they also have European and US market, which ChargePoint doesn't have. ChargePoint is, I believe, just in US at the moment. A competitive advantage of this company requires sophisticated products and deep local knowledge and relationships. I know this. I used to work as a design engineer. I was on contract work with Microsoft, actually. And Microsoft, based in the US, they wanted to actually revamp their offices in Europe, and they wanted some design and consultancy help on that. And basically, they hired a European party, the company I worked for in the UK, in order to help them with that and be the bridge, basically, between the US and Europe. Because there's so many different cultures in Europe, it's quite difficult to navigate, especially for a large business in the US. Many large US corporations tend to hire a local player to actually help with that process. So that could be a competitive advantage for EVBox over ChargePoint. So this is their Everon software, so they can monitor their charging network status, optimize their charging operation, improve cost efficiency and calculate CO2 savings, and increase revenue streams for the customer and for the business. They have an 8x growth on ChargePoint shipped between 2015 and 2020. Year to date, they've shipped over 190,000 charge points. Now, that's a hell of a lot of charging stations. So they're currently growing at around 74% on the revenues. Now, that is incredibly fast. Generally, I say a growth stock is one which is growing at least 20% per year on their revenues. This is growing at 74%. So they're up to 372 million euros they're expecting by 2023. Gross margin, so projected gross margins seem quite healthy. This is due to their software side of the business. So 24%, and that's expected to grow to 37% and 38% by 2023. And that's when they plan to become EBITDA positive, which stands for earnings before interest, tax, and amortization. So this is that year-on-year growth, 72% projected, 87%, 65%. Bear in mind, these are really optimistic growth rates, but the company is still small relatively, so it is possible. The optimism and the fact that this stock is priced for perfection does add an extra risk into investing into this company, but still very interesting. Okay, so now let's dive into the SPAC setup. This is actually one of the most interesting ones I've ever come across, because usually the SPAC investors, the guys like you and me, the retail investors who are investing into these SPAC companies, they only get a small percentage of the overall total pie of the company. And I don't see anybody talking about this. Even Jim Cramer on CNBC doesn't even mention the fact that people only get a percentage of the company or the true valuation of the company. But I actually look at this because that's actually important. That's actually what you're actually investing into if you invest into the shares. So in this case, I'm actually pleasantly surprised. SPAC IPO investors get 25% of the final company. Now, that's actually a good thing. Usually, I see a lot of these SPAC companies, the retail investor only gets around 10% of the final company. Now, you don't really notice this. It's just in terms of the share dilution, which you don't really see. So just be aware of that, guys. Okay, so let's dive into a few more comparisons here. We can see these guys are projected to grow faster than all their competitors. So they're growing faster than ChargePoint. They're growing faster to all these others in the space. I don't know why they've included Peloton on there. Maybe it's just a fast-growing company, which I suppose it is, 60% growth. So these are projected to grow at much faster rate. Valuation here, they also went public at a better valuation. So when I did that post in the VIP group, that was a few days after the merger was actually announced. So the valuation then was the best out of all the charging station providers. So that was a 6.7 enterprise value to revenue, compared to ChargePoint, 76, and all these other players, they had really high valuations then. But now obviously the stock has shot up a little bit. So what's the new valuation for this company? And is it still a buy today? So what I've done here, I've got the current share price, which is around $29 per share, which equals 25% of the company. That's a market cap of $1.32 billion. Stick with me here, guys. Try not to get confused. Total value of the company, $5.28 billion. Yeah. Total value of the company. 2021 revenue, I've done a few different scenarios. That's what we know, 2021 revenue. That's quite easy to predict. $145 million. That's a price of sales of 36. So that's very high. That's extremely high for the company. Let's check out 2022. Projected revenue, $273 million. Price to sales of 19. That's still quite high. You're paying 19 times the company's sales on 2022's revenue. 2023 revenue, $451 million expected. Now that's a price of sales of 12. So that's a better valuation than all the other players right now, including ChargePoint, including EVgo, and many other players in this industry. So that is the best valued EV charging play right now, despite the stock actually already running up by around 100%. Now, bear in mind, this is on very optimistic growth estimates of around 70% per year, and this is up to 2023. So this is the projections up to 2023. The stock is priced for perfection. So if the EV market doesn't play out how many people are thinking it's going to play out in terms of all the growth, then that will definitely impact this company in terms of its share price, in terms of its valuation. The company's also slightly smaller and a bit more speculative. So that's another thing to be aware of. Smaller companies, small caps, penny stocks, they are a lot more volatile. So just be aware of that. Okay, if you guys want to know exactly which stocks I'm buying, which stocks I'm selling, exactly when I'm buying and selling stocks, so getting those early updates, not just on the stocks I'm buying, but also on my watch list, such as this one, which went up by 150% over the past couple of months, then feel free to check out that first link in the description below for the VIP group. There you can talk to me directly about your portfolio also and gain access to loads of other benefits. So if that's something you're interested in, feel free, first link in the description, watch the video and just see if it's for you. But with that being said, if you guys found any value at all in this video, please give it a big thumbs up. That helps out tremendously with the YouTube AI. But if you're new around here and you still haven't subscribed, what are you waiting for? Feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And with that being said, I hope you guys have an incredible day and I'll see you in my next video. Invest safe.